this method really takes advantage of price reversals at key levels, right? So just for example, if let's say going back to here, if you were short from up here or something, it might actually be best to look to take profit at this supply, right? Because look at that. Yeah, we missed out on a little bit, but who cares? We reacted off of that supply zone. That's why it is sometimes good to target the opposing, areas of supply. So for this one, it would have been this little supply zone right here. And there even is kind of a small one up here as well. It's not great, but there was maybe even potentially to take profits here as well, right? The third way is to target opposing structure, previous highs and lows. That's pretty much what you could be doing. So this is another option. I personally don't do this. I know some traders who do, and honestly, it makes logical sense to me. It's just not something that I've ever done. I've seen it work really well, and it gives you a great idea of how much profit you can get in the trade. And this focuses on the market's structural points, right? The support resistance areas, and it allows you to exit once price has moved through significant price levels. So in this example here, you can see, let's say we took the trade down here. If we're targeting, structure highs and lows, we would have targeted this high up here, right? Let's make this just a little bit thicker so we can see. This would have been our target, this previous high. And why would that be a target? Well, first of all, in this instance, we technically lost out on a bunch of profit, but it's very likely price could have pushed up, reacted off the high, and then pushed back down, right? Because just structure. So that is another method. It's a pretty decent method as well. I like it because you visualize the trade before it happens, right? You can visualize, my 3-to-1 take profit is before the pivot high, or before the pivot high here. That's great. Or I can see how much profit is to that pivot high. I like the trade. It's offering me a lot of profit. It's just another way to take profit. And then the last way, which is also pretty good as well, is to not even have a take profit. So you would just be entering a trade with a stop loss and no take profit. And this does offer more flexibility because you can choose to not set a take profit, and instead you can trail your stop loss up as price moves in your favor. So